Hey traders, this is Cousin Benny coming to you from theclosingprint.com on November the 10th, Sunday, with a market read and a short watch list. On Thursday, I uploaded a new blog post which basically talks about where we are in current trend at this upper trend line and what I was anticipating going into Friday's trading. We can see that all of our indicators were red and pointing to a down move. Now, what the market did on Friday was throw us a curveball and threw off many of our indicators and correlations. This is a chart of the 10-year Treasury yield, and we can see that it clearly broke out of a descending wedge or channel on Friday. And what this means, the top indicator is the difference between the 3-month yield and the 30-year, or the yield curve. And basically, when you see a rising yield curve, it benefits banks that borrow at shorter term rates, lower shorter term rates, and lend at higher long-term rates. It hurts dividend-paying stocks, home builders, and REITs. If we look at the home builders, these two charts here, we can see that we hit resistance and are moving down. Looking at REITs, we can see a similar thing, that we're in a downtrending move. Looking at the chart of the utilities here, we can see that we hit resistance and we moved off of that level on Friday. Now, the Dow Utilities is often used as a proxy for bonds, and that's the symbol UTIL. But back to the Treasury yields, that's why you saw these sectors, XLB, XLI, XLK, and XLF, doing well on Friday. A complete change from what happened on Thursday, where it looked like the whole market was falling apart. So if you don't already subscribe to my blog, you can click here and then click on the subscribe button right here. This is where I post a lot of my thoughts during the trading week, in between the weekly YouTube videos that I post as well. So you can see what I'm looking for here. I'm looking to go long at oversold levels on the S&P/X A50R, which I can pull up here. Let's go to my indicator chart so you can see a larger version of it. Here we are right here. The SPX A50R is a number of stocks trading above their 50-period moving average. You can see that we're moving down and we spiked up sharply, pointing towards a selling zone here at these overbought levels. So I'd be watching that level. ADX still is giving us the signal that we should be moving down. The strength of trend has completely fell out. The MACD gave us a cross. We have NIMO, came down to about the 45 level, I believe. We have NYSE, gave us a cross to the downside. So that should be red. I should have a red indicator there. And bullish percent is still really high. So anything could happen this week. I really was puzzled on the action that we saw on Friday, because we almost had an outside day. We didn't get down below the low. The futures did. The futures on the unemployment data, which was very misleading, spiked down to 1736, I believe. But we didn't get back above the high. So this completely negated what happened on Thursday. Realistically, if you remove these two candles, we're still in a... Remove these two candles on Thursday, Friday, we're still at levels that could see a retracement if you look at all of these indicators. Are we losing correlation? It's a possibility when you look at what happened with the sectors I mentioned previously. So, going back to my thoughts, if we do resume this down move, I'm looking for the number of stocks trading above their 50-period moving average to drop. I'm looking for NIMO to move down to the minus 100 level. I'm looking for a nicey bullish cross, which we don't have. Looking for MACD and the under indicators to move as well. Now, one of the things I'd be looking for as we get down there are some reversal candles, like a hammer. So I'll be looking for this type of candles where we have a low here, a lower low with a doji, and then a higher high. Okay, higher high above this close. I'm looking for this type of candle pattern. Right now, these two really didn't give us a signal that indicates we could see further upside, other than the fact that it took out the Thursday low. There's some really weird things going on here, so I'm mostly in cash anyway, so I'm watching to see what happens here. Now, if all these indicators completely reverse and turn to the upside, that could completely change the picture. So that's where I am currently. Back to the blog, though. There's only so much you can cover in a Twitter communication. So this is where I communicate a more in-depth thought during the trading week. I typically post one or two additional comments during the week between videos. So keep an eye on that. Also look at the VIX. The VIX dropped back down to the 12 or 13 level, I believe. So what we were looking for here was a move above 15, but we completely got rejected and moved back down on the VIX. Note when you get extremes here, whether we're very close or very far apart between the XIV and the VIX, these are just the opposite of each other, that you can see a reversal. And that's typically what you see when we get up here in the buy zone. When the VIX moves through 15, that's a confirmation that we'll see further downside. And a move up into the 20 levels gives you an area where you might fade the VIX and buy stocks. So let's look at these sectors that benefited from the rising yield curve. XLB, the advanced decline percent popped on Friday, as we would expect. You can see we had an outside day on materials at support, and these are the 10 highest weighted stocks in that sector ETF. So keep an eye on these on Monday. Looking at our XLK is one as well that did very well on Friday. We can see we continue to rise on the advanced decline percent, and we had almost an inside day. This didn't look as good as XLB, but we're still rising. XLF, obviously, we did well. We had some divergence here at one point, so we still have to get above this descending trend line. But you can see that we almost had an outside day here, and again, this is the 10 highest weighted stocks in that ETF. Looking at XLI, you can see that we're continuing to rise here, and we had a nice candle. This more resembles what we saw on the S&P 500 in terms of price pattern. We are at this upper trend line, and we should get some resolution on the coming week. Now let's take a look at some of the candle glance charts in these sectors for possible setups. But before we do that, let's take a look at gold and commodities, because the CRB index is something you should keep an eye on as well with these rising yields. So with CRB, the commodities index, you can see that we're in this descending pattern. We are at lows, and if we go back out to the weekly, we can see more information. We can see that this descending pattern that we're in. With rising yields, this is going to hurt commodities, gold, silver, and so forth. So we're looking at this low here, because we took out this low at 275.54. We put in a doji on the weekly this past week. So we'll be looking at this low here at 266.78. So keep an eye on the CRB. Let's take a look at gold. So if you're looking for areas to short, I'd be looking at commodities, gold, silver, and so forth for some possibilities on the individual components and charts. Note the Kirby level here that we found resistance on the weekly on gold. Let's take a look at the daily. Looking at the gold daily, we can see this large Kirby band here. If we fall below this level, this could get very interesting. We can see our resistance points here. This is basically a triangle that we're nearing support on. So this will be interesting to watch this week, which reflects back to the S&P 500. We had this big down day on Thursday, and then we had a big up day on Friday on smaller breadth. I think it was 2.73 to 1 to the upside versus something like 7.5 to 1 on the downside on Thursday. So the breadth was commensurately bigger on the downside on Thursday. So something is going to give here between the yields and what stocks are doing and the S&P at highs. Something is going to give. So being mostly in cash, I'm watching these levels with great interest to see what we might trade going into the week. Looking at the US dollar, we can see that benefited handsomely from this change in the yield curve and the spike in yields. We broke above this resistance level here. We have this downtrend line that we basically came up to, flagged at, and then are breaking higher now on the dollar. And the euro, as you would expect, is lower and weaker. Now, if you follow me, you know I talk about DBV, the Currency Harvest Fund, which is basically the carry trade, Deutsche Bank's comparison of low interest rate currency countries versus high interest rate currency countries. What you want to see is a move higher if you're bullish with stocks, if you have a bullish bias, and what you conversely want to see this move lower if you're bearish on stocks. Note the Kirby here, note this shelf right down here at the 25.59 level. In the 25s we could see some support. If we break down through that, that would be very bearish for stocks, which makes sense considering where we are in the S&P 500. So this is what I'm talking about with regard to stocks are moving higher, but yet the DBV, the carry trade, is decoupling from correlations currently. So it appears. So I'd be watching this very closely. The same goes for copper. Copper futures were at a 4-week low, and we can see that we're inside of this triangle pattern right at support. We're starting to drift back towards the 50 RSI, and we saw some decent volume on Friday, but we have this big Kirby band here which is acting as resistance. So I'll be watching copper as well. Now let's take a look at some individual components. The last time the yield curve started, or the yields on the 10-year started increasing again, we saw this run up in the spring into summer, and we traded quite well on this particular move. Now, breaking out of this descending channel, we had a very big day on Friday, completely engulfing the previous 2 to 3 weeks of action and moving higher. So I'll be watching PACW and a number of other stocks that we traded that past week. Matter of fact, let's take a look at PACW. This is one Diana did quite well on. Yeah, you can see we had this nice move up. We traded this range here. We have this nice cup and handle pattern, and now we're holding the 10-period EMA and we're moving higher. So this is really looking stellar. Now, I mentioned last week that I have candle glance charts of the sectors, the 9 spider sectors. And we can see this is one page of 3 of the XLF. It's an easy way to run through these charts and see patterns that depict maybe a breakout that we might want to trade. We can see ACE is at highs, AFLAC is getting back above the 20 period, and the rest of these charts, AIG not doing so well. It's down here at lows that recent lows. Berkshire Hathaway, a nice bullish engulfing pattern. Charles Schwab, some of the brokers. GTO had mentioned the broker-dealer index this past Thursday, Friday. CME Group. You see this really nice candle that took out all of these candles here in the previous 2 weeks. Co-America, Franklin bouncing and hammering off of the 50-period moving average. So these may continue. So I would watch for continuation patterns in some of these stocks for trades going into the week. Looking at the next group, we can see GS had an inside day on Friday, but we have a bullish cross on the 2050. See a hammer on HCP. Huntington Bank Corp, nice regional bank. You can see outside day, bullish candle there on the KRE. Key Corp just broke out of a recent high, a nice flag. ICE, which has been doing very well. Some of the guys traded that in the chat room. Lincoln, Kimco Realty, Marsh and McLennan mentioned this flag that we were seeing coming into the 20 period. Watch what happens on this on Friday, or excuse me, on Monday. Watch for what happens on this on Monday. Lowe's Corp, it's inside day, even though it's a green candle. MetLife, PNC Bank. Let's take a look at the last group. Prudential had a pretty big day on Thursday, Friday. It faded on Thursday, but note the volume here for a possible continuation. I would probably like to see this pull back into this range right in here between 82.50 and 85. Regions Financial, this candle here on volume. Some of this could be short covering too, so keep that in mind. STI, SunTrust, and there's some with relative weakness too, so keep an eye on these candles if you're thinking of shorting some stocks. This is at support, but just saying that stocks that showed relative weakness on Friday should be kept in your trading journal as well. Alright, Vornado, nice hammer off the 50-period moving average. Wells Fargo, almost an outside day. I'm not sure it took out the lows, but higher volume than it saw on Thursday. And Zion pointed this out in the chat room, a complete outside day on Friday. Just going to blow through this really quick because this video is already hitting 20 minutes. This is XLB, the materials sector. You can see the things that did quite well. CF Industries. Some of these may see continuation patterns. Cliff Natural Resources is flagging here. Freeport-McMoRan, remember copper. It's a big factor, big component of what they mine. Ecolab, International Flavors, Nucor Steel, outside day on its flag. Owens, Illinois, Mosaic, U.S. Steel. Hugh Carwitz pointed out steel stocks in the chat room. And Vulcan Materials. Looks like it's holding on the 20 period, so keep an eye on the 20 period and your sectors going into the week. Okay. And rounding this off, just keep in mind the comp had an inside day, Harami on Friday. We have the 10 period EMA turning over. Even though the sector did well, the XLK, note the bullish percent is dropping down through a range that it hasn't seen in some time. And we were at a buy zone on the NAMO. Looks like we could get a crossover here. The number of stocks trading below their 50-period moving average on the comp also moved low. That's good. It's currently at 54.92, and ADX did peak and is continuing to move down, so it's confirming the down move. The Russell, we came down to the 50% fibs from this low to this high, these pivots, right down to this trend line almost, and bounced. RSI is getting back above 50. Keep an eye on that. Relative strength to the S&P 500 though is weak. We did have an oversold zone that we traded off of on that bounce, and we have ADX down here at the lows below 20, so that's indicating a range bound trade. So this could move sideways on the comp, or excuse me, this could move sideways on the Russell. Alright, so that's going to do it for me for the weekend. This is Cousin Vinny coming to you from theclosingprint.com. And remember to check out my blog if you want to be a subscriber and get this information quicker. I also post my watch list here during the week, early in the week typically. And come and check out Goat's Day Trader Bootcamp, which I'm a member. We have a lot of great traders there with great trading ideas. You can try it out for 2 weeks for $19.99. Okay, hope this helps. We'll see you in the chat on Monday. Take care.